Welcome back to Markets Today. We are discussing the NSE's performance for the month of May 2020. Before we took a break, Martin and I were going back and forth on Diamond Trust Bank. He sees a lot of value in this bank, saying it's trading at 0.3 times book. And certainly the foreign investors are also seeing value because it was the highest traded stock in terms of foreign inflows into the market. Just as we're going to break, Martin, you're just talking me through foreign interest in the Kenyan banking space, and we're talking about the Egyptian bank that bought a Kenyan bank.
Yeah.
Walk us through the details of the valuation for this deal.
So CIB released a statement that they're injecting, they bought a 51% stake in the newest lender that came into the market around 2016. That's Mayfair Bank. They injected $3.5 million for a 51% stake. So when I did the math, they basically bought the bank at roughly 7 times multiple to book value. Yes, 7 times. So
that's very expensive.
Extremely expensive.
Why?
I still don't know why. I would like to have been in the negotiating table because, honestly, I think we investment bankers are made for deals like such.
Wow.
Because on how the fact that they're able to get a 7 times, this is a bank that is really new. We can't actually tell. We've already seen how tier 3 banks are really struggling.
Mm-hmm.
So I'm curious to know the details on how that negotiation went about.
So
because 7 times is really high.
7 times book. What does that put the value of Mayfair at in dollars?
It was around 7 BKS.
So that's okay.
7 BKS.
70 million.
70 million, yes.
Wow. So then is that the reference rate? Should then this stocks on the banking stocks on the NSE trade?
We shouldn't be looking at that because honestly, 7 times. I think the highest we've ever traded around 2.5, 2.6 times for the industry. That is pre-rate cap. For 7 times, I'm still
puzzling. That's certainly something to think about because
exactly.
Why is a foreigner buying a tier 3 bank?
A tier 3 bank, really new tier 3 bank, because I did an analysis of tier 3 lenders, and most of them are literally on. They're just dead people walking, as in dead banks walking, because they're on life support, most of them from central bank with regards to liquidity ratios, capital ratios. We already saw like your Spire Bank, you've already breached the capital ratio requirements. You look at how their business model was working pre-rate cap. It was all about purchase funds, and then you charge a higher margin when it comes to lending.
Okay.
Now that is no longer there in the mix, even with this after rate cap, because technically still there. You can't charge more than 13%, ideally speaking, from the word on the streets. Mm-hmm. So I really don't know. I would like to know.
All right. So it's certainly a sweetener for what you're saying about Diamond Trust Bank.
Exactly, because at 0.3, okay, you can. And I don't want to say it's a tier 1 bank because
yes.
From a business model perspective, I think it's more of a tier 2 bank, just from a cost of funding perspective, because they have quite the cost of funding is still high.
Okay.
Yeah.
Then I think the other one that was exceptional there was. There was Cooperative Bank that was second in ranking in terms of foreign net inflows. Is there any correlation to its inclusion to the MSCI index?
Not yet.
Okay.
We didn't see a lot of activity on that stock because it's pretty liquid.
Okay.
I was curious how MSCI.
Yeah. No, that was because they kicked them out of the index. I think 2 years ago.
Yeah.
Okay.
Yeah.
Could there be something brewing? Could the SACCOs be finally willing to relinquish part of their holding?
I don't know.
Okay.
Let me just use I don't know.
Fair enough.
I don't know.
All right. The top 10 foreign net outflows. Now the volumes there are material. Equity Bank.
Yeah, equity. I think it's purely because there was a bit of movement, especially after they withdrew the dividend, which made sense in my view. It makes sense based on the client profile that they have.
But this is a lot because it says $30 million.
Yes.
That's 30
almost
million.
$31 million. Yes.
That's 31 billion.
Yes.
and you should have been paid out 9.4 billion.
9.4 billion.
9.4 billion in the dividend.
Yes.
This is brutal.
It is brutal.
Yeah.
It is brutal, but at least the locals still took advantage, because you can see, in as much as there was quite an outflow, the outflow were just
Actually,
18.
the outflow was 18, not 30.
Not 30. Yeah.
Okay, that's 18
that was the
billion.
turnover. That's
18 billion.
Yeah,
Okay.
Yeah.
Okay.
So locals took bought in. I think most of the locals are trying to average down the price, which makes sense if, let's say, they got in way earlier in the year when the prices were around shy of 50 shillings. So it makes sense. There are locals actually who are trying to average down their prices, which makes sense. There was a conference call, Equity Bank with analysts last Friday, trying to explain their Q1 numbers. You saw how quite a big spike in impairments, over 600%. And what was surprising is that impairment was not technically due to COVID. It was, they just downgraded the real estate portfolio, most of the real estate portfolio, not all of it, into non-performing status, basically stage 3 loans. They already saw these loans already having stress levels, so okay, let's just downgrade them, and off they went, and they increased the impairment, which was really, I like the fact that one thing, and investors should take keen note on this. There's a line statement on the balance sheet known as statutory loan loss reserve. Investors need to look at that item very critically.
On the balance sheet.
That on the balance sheet, because that shows you how a bank is aggressive with regards to impairing loans. Because you look at Barclays or ABSA, that is for that matter, it's nil. That means they are providing way more than even what your CBK prudential guidelines, which are supposed to be tougher than your IFRS 9.
Okay.
So they're basically not discounting any value of security. Even if they're discounting, they're basically taking aggressively in regards to impairment. When we look at other tier 1 banks, KCB is at the highest, almost 6 billion, all right?
Yeah, KCB has always been up there.
Always
been up there.
Okay. So right now, equity, I like the fact that the impairment rate that high, but with regards to that line item, still remain flat around 700 million cash thereabout. So what they basically did is that they downgraded those loans, but they didn't they never actually discounted the value of that collateral, because they just thought like, okay, who's going to buy real estate right now? Which makes sense. Banks need to do that.
Yes.
Who's going to buy real estate right now? Or even if you're taking real estate, the haircuts are going to be big. So that line item should not be expanding at all. Actually, that's the thing.
So that's a bit of a question mark.
Yeah, so I'm happy that Equity Bank, that line item is nil.
Okay.
Yes, yeah.
All right, fair enough. So I think in terms of just briefly the top movers as usual.
Yeah, Safaricom will lose.
Safaricom?
Yeah.
Okay. So as we're getting into the month of June, what do you expect to happen on the NSE?
Now, June will be interesting, because we'll read the budgets. The budgets should be next week. Is it next week?
Yes,
should
June
be
11th.
next week. Yeah, June 11th should be next week. Curious to see how the government will plug the deficit, because the deficits are going to be widened.
But you do know it's going to be you who's going to plug the deficit.
Of
right?
course,
Your
that's
taxes,
the sad part. That's the sad
consumption.
part.
In fact, they're charging us on usage of social media platforms. They want to start taxing that.
I saw digital tax.
Digital tax.
As in,
So Netflix, you subscribe, you download an app.
Yeah, exactly.
You're charged. You
bonkers.
stream anything on YouTube, you're charged.
Okay, I didn't see that part.
Yeah, so that's the proposals are aligned to any internet connectivity, whether it's streaming anything, movies, anything on YouTube, you're charged. And I think they want to have a model per every engagement that you have. And the kicker is the companies, the service providers, have the responsibility to declare that tax and to remit it.
Life is going to get tough.
It's not going to get tough. We'll just innovate and find other platforms. I don't know, but
no, I think it's going to get tough, because even EABL, what they're targeting EABL with now, low cost beer. I think that.
What are they? No, please enlighten us.
Okay. This is what the Treasury released guidelines on excess tax remissions, where they want now to reduce it from 80% to 60%. on low cost. That is basically
That's
exactly.
material.
That's very material
That's
for
material.
EABL. Very extremely
So
material.
are you a buyer of EABL?
No.
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 You can't.
I remember even last time
Yes.
when I was here, I said they will take a hit the second half. In the course of last month, they issued a profit warning,
Yes.
which
In
made
fact,
sense.
I think we were discussing at 139 and we're like, no, just...
Yeah.
Okay.
Don't touch EABL.
That's material.
Extremely material.
That's
And
material.
they've come forward like, okay, this thing is going to hurt our business. And it makes sense. They've just invested 14 billion in a plant in Kisumu, and right now it's closed. You can't package keg. Okay, so the fact that the bars are closed, you can't package keg, so they have actually shut down the
That's
plant in
material.
Kisumu. Yes.
Because the last time I did any analysis on East African breweries, I think their excise tax rate was 44% of their gross revenue. So 44 shillings from every 100 shillings they sold, they had to remit in form of taxes. So what you're saying is effectively this 44 could easily move to 64,
No,
60.
you can't say 64
Okay.
because
It moves to, no, it increases by 20%. So it
yeah.
moves to about 50,
about
give or
50.
take.
Give or take.
And
yes.
that was 2-3 years ago, so I have not I didn't incorporate the tax adjustment for last year.
for last year.
Yeah.
And remember, they also have the inflation adjustment.
Yes, the inflation adjustment as well.
Every August.
Wow,
They have to do that.
that's very high.
Exactly. And don't I have a feeling when next week's budget, we'll see more of those sin taxes come into play, because the deficit is pretty big, and the fact that tapping the foreign debt market right now, I think is going to be tough.
Yes.
It's going to be extremely tough.
Actually, it's interesting when you talk about that, because I think we've seen an article in the Business Daily saying, I mean, the Eurobond, when you read through the Eurobond information memorandum, it does say any incidence of default, if you just don't pay, that's default and it can be recalled.
It can be recalled, yes.
So you're in a space where you need help, but if you accept help, on this other hand, you're tied.
They are tied. But I was talking to a bank treasurer had one of the treasury directors in one of the tier 1 banks. They told me there's something interesting that you also need to note. Show me, look at the yields. When Moody's downgraded, I won't choose the word downgrade, downgrade the outlook actually,
Yes.
not the rating.
Not the rating.
Not the rating, the outlook. So look at the bond yields. I expected to see the bond yields just spike.
Oh, and what happened? And this
They
is
didn't.
for the Eurobond.
For the euro.
Okay.
They didn't move.
But hadn't the market been pricing this because there was a
that's the
movement
thing.
earlier on
Precisely.
in the year?
That's the thing.
Okay.
They already saw the outlook.
Yes.
They already priced it in. So, but our bond yields are not that bad.
Yes.
If we hold it stable till the end of the year, chances are we can actually tap
Something else. Okay.
next year.
Yes.
Okay. If we maintain those bond yields as they are, as a note, we don't see quite a big spike or a big movement, because our economy technically, at least, is not commodity driven economy. So we should be able to maneuver. All right.
Yeah.
But it's still very iffy and jittery.
Okay.
So things.
So there
things
are
are
many
tough.
things, but as we always say, I guess this has become the norm. We're always we are the best of a bad batch in Africa.
Yeah, the best of the bad batch.
The best of
yes.
a bad batch
Yes,
in Africa.
yes.
I think our time is suddenly coming to an end. So what are you advising investors to do this month on the NSE?
I'm neutral on NSE, that's the thing.
So do nothing now?
Do nothing now.
Okay.
Let's wait for the budget. Let's see what kind of amendments, what kind of tax measures are, because this, I don't envy Yatani, because he has quite a complex way of balancing that budget this year.
Funding of his budget.
The funding of his budget.
So neutral for now.
I'm neutral for now.
Are you would you give money to the government through the T-bills?
The T-bills. Yes. Like banks right now are all about T-bills. They're shining away even from a 5-year paper.
But they're being forced to roll over. I know one of the T-bills that expired last month, the investors were told, roll it over for 6 years.
Now, you're using the wrong word. They didn't say use the word forced.
Yes, okay.
Yeah.
There was an incentive
exactly.
for rolling it over for 6 years.
Exactly. And it's still bidding. You still bid, And if if you don't get it, you don't get it. It's a switch. Basically, they're calling it a switch. So it's basically trying to lengthen the maturity profile, which makes sense from a cash flow perspective. It makes sense. So it's purely bidding, and I wouldn't say it's forced. It's not forced.
Okay. Yeah, so there's an incentive, but I mean, your hands are tied, because the incentive is either you roll over for 6 years, then you've been investing for 1 year, or you can't come back again and bid for that paper.
For that paper, exactly. But for that paper, here's the thing. Look at the performance of the 5-year just 2 weeks earlier. The performance was actually lower. All right. Ideally, 5-year papers usually get over 100% subscription rate. But this time around, I was like, wait a second, what's not happening?
Okay.
So when I asked that treasury director told me, like, here's the thing. Talk, and when you look at the macros, but like, the yields will come higher.
Yes.
Down the road, there's no two ways about it. Government will need money. There's no two ways about it. So why? We are just playing short term.
All right.
Yeah.
All right. So cash is king.
Cash is still king. Cash and cash equivalents.
Cash and cash equivalents. So that's your money market funds, your fixed deposit.
Precisely. And 91, 182.
91, 182.
Yeah.
All right. Fair enough. Thank you so much. That's all the time we have, ladies and gentlemen. If nothing else, cash is king. The key trigger point for the month of June is the budget reading, which will be happening on June 11th. We will be covering that, and we'll be talking to accountants as well as economists on the day to be able to get a sense of what the budget means for you. I hope you can join us. That will be on the June 11th, next week on Thursday. But until then, see you tomorrow as usual, same time on Markets Today. Good day.